Hey everyone, it's another episode of Principal Profit Trader. Notice we're going to be focusing on principles through a system that then teach what the probability would likely to be based on lots and lots of pattern recognition. Okay, so let's just get into kind of where we are. And there's a couple different time frames we could look at. We could look at what the next day would be, aka the daily call. We can look at the entire history of Bitcoin for how it behaves from an investor perspective, really zooming out. Because just want to clarify something. Because even though there was a pause, I said I needed a pause day. This is when this day was in progress before could be considered. That didn't mean that all of a sudden, okay, this is going to be a great spot to. I think the lows are in and we're not going to leg down. No, it just meant that this thing is short term for day trading going to have a bullish day, right? Because we know that once this is a double bottom for one, two there is a hook from extremes, and there was the pause day confirming it. So it made sense from an expectancy perspective. Let's go on a smaller time frame. When I shorted here, took profits here, right? On this second double bottom, that should have been the end of the runner, right? And I almost exited. And part of me is like, just flip your bias long because this is a key reference area from 62.875 to 62.78 is a support zone. So if you fade key reference areas on non-trending days, which right, because yesterday, the day before this day, was a trend down day, right? We had one huge leg down, then we went right up to the 61.8, right? Because this was so bearish that even though this was so bullish, it still was in the context of this bearish, right? So this was actually at 61.8 that I shorted this. If you waited for the high of the day, you weren't looking at the magnitude of this move, right? And I also said that the more time we spend below the VPOC, the greater the odds the bears can take control. Until when? Until we get to the lows of balance. So I didn't, this double bottom is not I didn't draw these two lines after this happened. These two lines were drawn prior. Even though my system is amazing, sometimes life happens. I had to do distributions for folks. One of them was a client. You know, you might be nervous you're losing people's money, or maybe they're not as happy as they should. Things like that. So like that can affect your psychology. But the system itself is really awesome. So even though I knew to do this, like there is this grit and this grit and attitude and courage that is needed psychologically to execute it, because I knew to do this. I even was telling everybody ahead of time, like, hey, when it goes to the lows of the balance, it's just going to be a pattern of a trading range. You go long again, exit your shorts. But where though? Do I wait for the bottom here? Now, notice I'm not drawing like support and resistance lines, right? I'm drawing zones, general areas, and I'm drawing them based on key reference areas that I teach in the channel, most of which are, noticeable in certain ways. Like you have a tail here, it's the bottom of it, but this is such a large tail, you have to break this up into smaller actionable zones. See, a zone is actionable. If I just drew a zone from the top of here to the top of here, from 59.9 to 62.8, that's in violation of our risk rule. So I have to break it up into actionable zones. So, I mean, look how awesome this was, right? How did I draw the zone? Very simply, if we just zoom out, if we go a little bit higher, I just want to get faster internet. So I'm going to close one of these charts. A little bit of internet problems on this katana here. Sometimes my HP, which is a couple of years older, actually connects better. It's like, what did I pay for this GeForce RTX for that apparently is becoming hard to produce? That maybe some decentralized infrastructure type coins like Theta purport to solve that problem, maybe. The problem is they purported to solve the decentralization of bandwidth prior to this, even video. Uh, they were doing decentralized video streaming, right? I mean, where did all this? I don't even want to go on them. I can't go. This just proves the point that like the system itself, which is based on mathematics and these facts in the chart, is superior to what anyone says. 100%, right? And it just, unfortunately, to know that lesson, some folks had to get dragged down into another same thing they did the last bull bear market run in the 2020 21. They just You know what I mean? There's no risk management, over investment in altcoins, and a lack of belief that they can actually consistently day trade this. Why not? You know, so this zone here, right? A couple of different things. One, it was this low here, and as this tail came back up into here, right? This move was like the last little area, right, where we kind of launched off. Like that was the logic of drawing that zone, right? I'm just trying to see it on a 15-minute. I mean, it just sometimes I'm like, wow, these zones really work well. And then of course I'm using also trend lines to show the direction. I mean, you see how this was awesome. Like when you have a confluence of a directional edge with like a trend line, support resistance with a horizontal zone, you have extra edges. Like you see how this was a short here? I circled it. You had the horizontal edge of these two dotted lines, which was a zone from 16, and you had the directional. And there's actionable ways to actually how you're supposed to behave in a zone. If you're taking a zone fade for a tradable reaction, you're only if you're going to follow the rules 100%. I'm telling you right now, it's very hard to follow the rules. I have trouble following the rules, even though the rules make sense. Like zone, if it's a zone fade for a tradable reaction, you're not expecting a large move, so you have to wait for the back of the zone to the middle to the back because you want to get really good trade location. If it's a zone fade for reversal and you're more like, hey, I can't miss this, then you could get a little bit more aggressive and take it at the middle to the front. You could even take it a few ticks ahead of the zone, right? If it really makes sense. So when would you, do a zone fade for reversal? Well, as I'm shorting up into these stronger areas of resistance where bigger moves have launched down from them, right? That is an area where that would be a zone fade for reversal. So in my mind, I'm like, okay, this is a micro bull bear zone. I create these terminologies so I can connect a language actionable plan under a very stressful circumstance. I'm telling you right now, if you're paper trading, you will be doing a lot better paper trading. When you're trading real money and you got bills to pay, you will fucking freeze under pressure sometimes if you don't have the spiritual connection to let this go. When I'm 100% connected to the market, I'm in the ultimate flow state, which over the last few months has been some of my best calls ever of my entire trading career. Because I've been very diligent, because I'm isolated out here, I've moved, I'm not away, I'm not around anybody. But the minute I have to deal with people, I can only see the trades, but I can't pull the trigger. Notice I've been telling everyone what to do, but I didn't say, oh, I'm shorting on this. It's not that I'm afraid to tell people. I have no problem giving signals. I'm just telling people what I'm doing. The problem is that I actually saw the trades, but I just didn't have the psychology and the spirituality to do it because of, like I said, what I was doing before, which was all those damn distributions, which is fucking exhausting. Okay. Sending crypto on blockchain and wondering if it's going to get there and dealing with a litany of problems. And if you have VPNs, if they catch you, if they don't, it's ridiculous. So, I mean, I'm really looking for a solution where there could be a tax-free entity in a different country that I could establish a company there and just live peacefully, like at Puerto Rico, Act 22. But the problem with that one is that I don't even know if Americans are still allowed to do that. Plus, you have to live there for 6 months, and I really don't want to live in a foreign country for 6 months. But just going back to, how these zones work, right? So, right, there was the short-term edge, right? So everyone, you could just see, like, when this move happened off this zone, everyone was saying, hey, my God, this could be it. This move is great. I got texts from all these people that aren't professionals. That was my contraindicator. I have contraindicators that usually when I'm doing something different, they give me the extra edge, and they're really good. The problem is that they just don't see things. Yes, this was a big move, right? But when you have a move that goes uptrend, uptrend. I mean, you had right a strong move relatively, right? In a day, we had a straight line move from one end of the balance to the other, and this is a significant balance of height, right? What's likely to happen? Are we likely to have a balance breakout in a trend, or are we statistically likely to keep balancing? Obviously, we're statistically likely to keep balancing because balance and sideways action is much more prevalent than trend days. Just notice it. Read studies on the S&P. I quote them in the channel all the time for my psychology. Trend days happen, a pure trend day 2% of the time. Double distribution, average ones 10 to less, right? These hybrid highways days, a lot more. Pure sideways, like 30%. Like even the ones with the perfect highs and lows and balances, right? So why did I want to get out of this, but hesitate? Like the idea of taking more action and more risk when I could just maybe it'll break through and I'll have a runner. I just didn't want to perform because I wasn't, even though I knew that towards the lows of these, you go long here. If you're stopped out, you go long there. Why? Because that's correct process, right? Because you were actually fading a zone. And it's not like it went sideways and then blasted into the zone where you could be fading a downtrend. What happened here? Well, we were at the zone. I tell you, like the longer you go sideways and oscillate, I listed all these factors out. The longer we mature a balance, the longer it spends, particularly around the VPOC, which this was. Notice it wasn't going to the extremes. The greater the odds that there's going to be a trend down day or a trend up day. And then I said, well, based on the blah, 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 it's most likely going to visit the lows of balance because the larger time frame has been bearish and probably going to continue bouncing. One, because we know a balanced breakout pattern is less often than a trading range channel. And we know that sideways days happen more often than breakout days. So you have to have a lot of good reasons. One, you don't want to go straight line trend from the bottom really strong all the way to the top. You're going to go ping, pong, and it's likely going to have a down day the next day. Psychologically, that would back in the day, these would be my worst days. You have a huge move, you're really psyched out for a bounce breakout. You think you're going to get a pullback continuation because it felt so bullish. You say the balance was mature, but you're not actually thinking in odds. You're just feeling your own energy. You're feeling your hopium. If you think statistically, right, we went up here. And if you needed an extra edge, I even tell people the extra edge is like if you have the real balls to do my system, you put an order there ahead of time and you go do something else. You can put resting orders at all my zones. The top trader in the world that taught me this system does that. It's just hard to do. So with the extra edges that I could add into it for your own psychology is you can have an extra exhaustion edge at a zone. That'll give you an extra probability. Your trade location won't be as good, but it'll save you a lot of losses, right? So you're trending. Let's say you missed the trend like me, and you knew to get out of your runner, but you kind of just were hoping around. I don't know. I just was, like I said, dealing with distributions, dealing with people, and dealing with a lot of their negativity and bullshit. To be honest with you, right? So I can't, trade and focus and go into my flow state and have the most winningest, most positive mindset when I'm dealing with everyone else's insecurities, fears, and hindsight bias. And they're puking on me because they're upset they invested in crypto. It's not my fault you invested in shit coins. I didn't tell you to do that. If you invest with me and make me trade your money, you make fucking money. Facts. So as we come back up here, right, as we're going towards the lows of the bounce and you see the pattern of the double bottom, right, that's when I'm like, it was psychologically hard in my body. I knew to okay, get out of the runner, flip bias, go on. I'm telling you, it was real money to do it, to actually trade. I'm like, I just didn't want to trade. Every time I put on a trade, I lose a little bit of my life because of the stress. And that's just the fact of trading. No one's going to talk about the shadow side of trading. I hope I make it. I hope I can quit my job. Yeah, I don't have to go to work every day. It's awesome. I take my dog. For the first thing I do is I go visit this cat next door with my dogs because the neighbor's away. She asked me to. It's like we visit. It's awesome. I'm pretty much isolated. Besides that, one neighbor down the road, but she's gone too. So it's like I'm completely in the woods, right? I don't have to deal with the boss and all this other stuff, but I do have to deal with people that are dealing with money. I'm not even talking about people on PPT. I have people that text me, call me. I manage some people's money, things like that. And it's you got to be in a flow state of it, right? To take this here, you have, it didn't feel right to take this right as this was coming up into the entire day, but you have to think of a probability. Everything in the system is counterintuitive. You're going to feel like the breakout is going to be a breakout when I'm shorting. The false breakdown, vice versa, right? Or, I have actually taken what I call contextually, I call it, quote, contextually lined bounce breakout, contextually lined bounce breakdown. That's actually a setup. If you're not on board it, and there's a lot of rules to these things. Have you guys noticed that the biggest edge is right when the market opens at 9:30, and then you have to think based on your daily call, okay, who's in control? Are they going to be in control of the day? There is an edge to that first hour. I'm giving you extra tools. This is way more complex than just that template I gave you because it's helping you. I'm not saying it has to be more complex. If you have the psychology to have the patience to have this faith and wait for these super wide double bottoms and only trade those, great. But I'm a type of person where I have to have a repertoire of setups because I'm going to get into trouble. I don't have the patience. That's the hardest skill to develop, to just wait for one setup. If you could just wait for one setup, I mean, I knew of a guy that only traded contextually aligned bounce breakout setups, not even breakdowns. Only that, maybe one trade a month, every 2 months. But he had a high hit rate and he was a profitable trader, a very low frequency. That's just not my edge. I can't do that. For example, this wasn't a contextually aligned bounce breakout setup, but didn't it have an edge to the system? Yes, because it had a pullback continuation policy probability. If you do your daily call ahead of time before this day open, you would have your support and resistance category in favor of the bears. I don't care if it's down or sideways down, it's in favor of the bears. Because the more time, and even on the daily, I don't even need to go there. I told you, the more time you spend below the VPOC, like this week here, the greater the odds that it's going to be down to visit the lows of the balance. And the trend will usually start from the high volume node. So this is red line is the VPOC. I have this other line here is the other aspect of the zone. It's like this general area, and it hits some of these selling tails up here. That's why I created this zone and this double top here. It's a really good zone. I shorted that zone. I forget when it was. Might have been here. When it came back up here, this was also a short. It just needed the courage to do it because the last couple of days was bullish, right? If you just looked at these 2 days. But on this day, right, it opened and it had an 8% move down. So most people would look at that and feel terrible. I look at that and I'm like, wow, I'm in stable coins. My portfolio is flat. I want it to go down more, to be honest with you, for the portfolio. But is there an opportunity that has high probabilities on the day time frame so I can produce some income for myself like this week? And here's the thing. Yes, there was. Well, if you have an 8% up move, all things being equal, and an 8% down move, you have to think, holy shit, like that group's in control that day. I'm going to get a pullback. But you can't think mechanically. This is why this is so much harder than some people think this pullback continuation setup. And you should just maybe do a sideways up or sideways down thing. Because if you are trying to get a pullback and it's near a support zone, like if you were buying this pullback here and this pullback, it's near this support zone, which I drew way ahead of time, like I said, oh, here's the top of it encapsulates that. That's why I had it. And like I said, the other part of it encapsulates, you know, this key swing here, which launched us up here. That's why I drew that zone. And you can see just go back to that day. That area was acting as support, right? So as you're thinking 8%, you're not thinking, wow, um, I can't wait to get on board this because it almost like moved too fast too soon, right? Into a support zone, which was not major, I'm sorry, bull bear, which is an automatic long. If you're really following the system 100%, you would then go long here, right? Which thinking about back of the zone, but it's hard to go against that. But even if you just were patient and patient, patient, like I was, impatient, didn't want it at the VWAP, was looking at it, right? Just because, like I said, off a big zone could get a big move, despite how far it moved. But it didn't just go lower lows, lower high, or go one low distribution for a couple hours to 3 or even 5 hours, 6 down again. It went boom, boom, boom. You got to think like when it moves too fast, too soon, right? That's a zone fade for a tradable reaction, right? If you short it around here, you're doing it for a zone fade for a reversal. If you have capital left over because you took some profits, which is what I'm supposed to do, this is the next level for me as I'm planning this in my mind. Then you go along with the leftover capital and you do a zone fade for a tradable reaction. You're not thinking a zone fade for reversal. You're still holding this reversal. As this came up into here, see, I wasn't in any of those. So I had to do something that was maybe visually harder, but you could see how this had good odds because as this was coming up into as this was, one went really fast, so it could get a bigger move, and at the bottom of a really strong zone, right, could creep up. So, like, if you were really just doing this mechanically and you didn't do that contextual thing where you back off the first two fibs, right, 0.382 is a loss, right? 0.5 is not a fib ratio, but it's just an old floor number. You would take that loss, and the final one's here. I didn't have to take one hour loss to then get a win. Which I know some people go sell or short. They go short because they don't know which one's going to work. That's a guy who's got really strong balls and he doesn't mind. Like I had to say a little bit more contextual. Like I said, I gave this signal here because of the strength of this zone and how fast we move down. I mean, I had to see this even double top up here to get it at, but this is the last one you want to take it at. If it did get up to the high of the day, like up here, then they had good trade location. Then I was going to short anywhere like around here to up here, and then have a stop below, like a wider stop above this. That would have had really good odds too because of the trade location. But that at that point in time, that is a zone fade for a reversal down. But it's based on trade location, right? Because at this moment in time, I'm really just selling in the middle of the zone. So it doesn't have good trade location. It's not a zone fade, right? At the same time, really, because like this happened at 20:45 the day before, you know what I mean? And then this was around 7:30. We're talking like half a day. 12. It wasn't like it was the moment. Like you have to think like um, the sustained momentum at this point in time felt really bullish because of this huge move up. It's not like this just happened and then pulled back on the 15-minute chart. Then the sustained momentum would obviously be in favor of the bears. If you shorted anything down into here on a smaller time frame to get in on a pullback or whatever. At this moment in time, though, because I didn't have the sustained momentum on my side, I didn't necessarily think it was against me either because of the exaggeration of the day, but I did have something really extremely on my side called the intraday bias. That's who's in control of the day. Because of that strong move down, which was 8%, we really were still down 4% on the day, which in absolute terms is a lot. Also, I'm not just looking at that in isolation. Notice I talked about what all that stuff was on the daily call, all the things below here, the VPOC, how the support resistance like was going to be more bearish because we were below this thing and how we were going to test the lows of balance. All that. Then you see the intraday stuff where mature balance, right? The pre-market factors for a trend, the support, who's in control in terms of support resistance, obviously holding below the VPAC. Bears are going to be in control. What's the odds? It's going to test the lows of balance. That's when you flip your bias. But given how smashing this was intraday, was it really going to likely to reverse when we were still down 4%? And I wouldn't have took this short if if this happened at like 3 o'clock in the afternoon or something, or even 2 to 4. Obviously late in the day. Towards the end of the day, the R is done, and I'm done. In my mind, like this was still prior to the market open, prior to 9:30, around 7 in the morning, 6:45. I'm already getting positioned because I'm thinking, okay, at 9:30, someone is going to win the day at that area. It's either going to be the Bulls or the Bears. It's an inflection point. I'm not just getting in a vacuum, right? And because, like I said, the intraday bias being so extreme that the previous sustained momentum being down, even though it wasn't really live at that moment, it wasn't really against you either. It was almost, so, and it was hitting, what good enough trade location. It didn't have the high of the day, which would make it a trade location set up for a fade. This is still a pullback continuation because technically momentum up to the 0.618. I'm just saying for execution purposes, if you've been going up for 12 hours, you don't really have bearish momentum on your side at that point, even though in context of the whole day, the intraday bias was still extremely down. This was, like I said, this was 8% move. We were only halfway up, or actually a little bit. We were more than halfway up. We passed halfway up. But let's say you didn't get in at 6.8, but then you somewhere got in between. You're kind of near the 0.5. So between the 61.8 golden mean and 0.5, in absence of market structure is usually a spot where sellers can get active on a pullback down continuation setup. And same thing on the pullback upside too. It's also in alignment, like I said, with this bearish larger time frame bias, which if we just zoom out, like just this is the larger time frame, who has really been in control here? It's just been one mega downtrend. Now all trends end in balance. We're in a balance, but you can't think like, oh my God, we're up here. Now we went from a downtrend. Now we're going to be a mega uptrend because that's the lower odd phase. If I say all trends end in balance, I didn't say all. And once in a while, they end in the climax V reversal. Just keep that in mind. They end in the balance. And keep in mind that they balance longer than they trend on average. So if we've been trending for this long, zooming out, downtrending for this long, this was 26th. Yeah, right after, right? This was that strong balance, same thing, right? Mature balance. Then we have volatility contraction. Then it's around the VPOC. You see how I'm just really describing everything in the pre-market factors for a trend? Then we're spending time above the VPOC. Now you have direction, not just trend. You have now it's up or it's going to be a downtrend. Now it has higher odds to be an uptrend, not hindsight bias, just showing you the rules. Like I said, spend time above it, goes up. Spend time below it, like I just did live before, it goes down. Trended up, hit the top of the range. What you do psychologically, you go short. Boom, boom, boom. Now, you might say, like, would I just go short again here? Well, just know, like, the longer it balances, the greater the odds that it is going to break out. And we went sideways near the edge, and then we exploded up into it. That's not an area where you want to short. This was different. We started from the VPOC. We got our trend up for several days. We made a huge move. Now, when you go relatively straight line up into the balance, it increases the odds for exhaustion. But then when you start bouncing on the short-term bias near the top of the range and then we explode from it, that increases the odds for the bounce breakout pattern, which we did get. But as it's breaking out, I'm always thinking, okay, it broke out, but is there enough volume on the day? Right? Is the price action suggesting that this is going to be a continuation momentum play, or is this going to be a false breakout? I'm always thinking that these are the scenarios that you have to always be playing. When you saw this happen, that's not giving you confidence for a breakout continuation. That's like, oh wow, like look at that ugly, ugly down, ugly, ugly down, ugly, ugly down, going sideways. Know that it's going to trend at some point. Then as it's breaking down there, that's confirmed. That's a false breakout pattern. What do false breakout patterns statistically do? They test the lows of balance or worse. And it certainly did that, lows of balance. Now you flip your bias and go all short. This is what you do. If you really have an account to trade and you are shifting these things inside your body, you have to really take care of your nutrition, your health, who you surround yourself with, because this is really hard to do on the body to shift like this. Boom, up. Now we go down. Oh, I'll be down. But that's what we're doing. I mean, that's really the edge here. It's like, do we favor support? Do we favor resistance? Are we going to go long? Or are we going to go short? Or what are we not going to do? A lot of the time is we're not doing. All these were real trades taken. You could see there wasn't many green arrows when we flipped our bias and had a larger time frame bias down. So when you go from 97 something down to 59, you save like 40% on your portfolio. Obviously, we got the bounce up. But remember, everyone was thinking, well, this might break up. When you start to rise in agony and you haven't even broken the high of that previous stronger move, it's the same kind of pattern that I shorted intraday the other day. It's like huge move down, overexhausted. Now gets a pretty big move up. Everyone gets hopeful, but that's the wrong phase. The larger time frame bias can still overpower the short-term bullishness, and it did. What will it do? It won't create like another down phase yet because there's not enough energy in the market for that. You have to go sideways for potential energy and rest so you can get the movement out of it, like a spring. And then the volatility contraction is like a spring. It has to be a coiled spring. The more this coils and the longer the coils, the greater the odds that it's going to have that trend energy out of it. Now, what happened here? We did get the trend out of it on this time frame, but then you got to also think, okay, like, is this behaving now? Is it just trending on the short time frame and the intermediate, or is this going to be a real bigger picture balance breakout? When you know when you saw the double bottom, right? Or maybe you just held a runner in, it starts to reverse up. Well, you don't even think statistically like, okay, I hope for the lower odds thing, which is the breakdown. The higher odds things is that when you go relatively straight line down, I know we had a good pullback here, but then we went bam into it, and then you make a double bottom. There's probably going to be a zone fade for a reversal setup because if this is going to balance, right? Why can't we continue balancing? If this trended for this long, why can't this balance for longer? We know that they balance longer than they trend, right? So, and also notice that within the balance, they don't really start to do much until they get to that. If they go to the extremes of the balance, they can start to go the other way. But then if they get caught up in the middle, they got to mature for a while to form that volatility contraction around the high volume node to then get the downtrend, in this case, out of it. But that doesn't mean that it's now going to be a bigger picture balance breakdown and we're going to have another trend because this really hasn't matured enough, in my opinion, compared to just look at how long this had to mature, right, to get this. So let's just clone this just to give an idea of like what the energy might be. Oop. And when we can expect a resolution here. I don't know why this isn't giving me dates past this. Is it must an internet issue? Because I just wanted to show like if we did this out, what this date would be. You know what I mean? What the heck? Hmm. Let me try this. Yeah, my internet's on only one bar right now. That's probably why. Let me do this. At least here. Okay, so it might be that we get the low sooner than this date, but this date is like the double bottom or triple, the bottom building date, right? Um, but that doesn't mean we can't get active before then and just hold through that because it's going to be at a good level, right? So let's see if we can refresh this and go down a time frame or two. Well, it projects it out on the weekly. This is looking like if this is the 16th, this started from this is probably like the end of March, maybe early April kind of a thing. So that's an alignment kind early March, April. If you what we saw on the other chart was that time cycle showed the final inflection point. But usually, if you just look at the level, there was a bottom like a month before that. There was the low, then it went up a little bit, then there was the double bottom, and then it had the breakout. So maybe in a month from now, we actually get the low, goes sideways for a while, bottom builds, then we finally get the final bottom, not necessarily lower, maybe even higher, but like the double bottom, it could be a dynamic or an inverse one, a little bit lower, a little bit higher, but pretty much, the bottom will be in a month. Then we get a double bottom. If we look at that Bitcoin time cycle chart, which says it's around May. It hasn't failed us yet. But if you look at how it behaved in the past, the time cycle chart, if you wanted to get the level, it would come in sooner than that. And then you'd have to have the patience if you missed it to wait for the bottom again on the time cycle chart. I'm just letting you know that, well, I don't think I think history shows if you look at, and I'll show you why when we zoom out, how price has behaved in Bitcoin's history. After this turns red, there's always another violent leg down, and then we get like the final sideways thing. You know what I mean? It could be like end of March like this, and then like April, and then May, and then something like that. And it's like, well, it doesn't matter here, there. Just the idea that like we're not really developed yet here. And if you just look at it, like kind of what happened here, top, broke the meridian line, held at support, price acceptance below the meridian line, which is the same principle as like, when I talk about going sideways below the VPOC or the high volume node, you're just having price acceptance below a key level zone. Notice then we had the pop up, which is the rising wedge or the false breakout into that. At the time, right, the green bull run now started to shift red. Green bull run now, which is even bigger, started to shift red. Right at the same eerily at the same false breakout, same false breakout. One leg down, you know what I mean? Two. This is like one leg down, really. I mean, I know it's a much bigger leg down, but don't you think that it if this was this bull run, and then we had this leg down, and this was loose bull run, shouldn't we get a bigger leg down on the start? So I don't think this represents this yet. I think it's like boom, and then we had one leg down, like this, one leg down here, and then sideways for a little bit, shorter than everyone thinks. Like this took a while. This didn't. Why? Because the larger time frame bias is bearish. can give you more often trends, right? Then we get that one washout down. It's like, oh man, we're done. But that's actually when it starts to consolidate. And if you, so it's from June till January. I mean, so yeah, I mean, even if you bought here, you would have got a nice move. But if you just held because you want to hold the highs, you have some, you got some waiting to do. But just that is the pattern, and that's kind of what it's done in its history here. If we just keep going back. This is in 2014, right? Top, da, 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 breaks below the meridian channel. Kind of has that hopium, starts to turn red, and then has to go sideways first. And it has like one leg down, then another. This one. This is 18, same top, breaks up, kind of false breakout at the meridian line. Everyone's getting hopeful, comes back down, gets the breakdown, goes sideways. And if you just look at the opportunity here on these, this was 20,000 down to like, 2 to 3. That's life changing if you have the patience to wait. Even if you bought like at the first one here, which could be like the one coming up in, you know, next month, right? The psycho crash, everyone thinks it's done. Then we go sideways, right? This is the COVID one where we had the lower odds thing where the V recovery. Remember, markets go down extreme and they don't usually go up, but that's what happened there. But keep in mind that was an anomaly. That scam was ridiculous. And notice that when we did get that, even though it's similar, what's the difference? You notice this is still green. Every other time we got the breakdown out of here, it's been really red. So just to keep that in mind, that the anomaly also was in green, and that hasn't happened on any of the other times that has been another violent leg down, and it hasn't been green. So same thing, right? Starts to turn red. We get a big move down. This is 22, and it's just the similarities in how these look between 22 and 26 are pretty striking. So yeah, that's what I'm looking at engaging to keep things in perspective in terms of when to reload a portfolio or who's going to be in control on a larger time frame. But for the income producing trades on the daily, there will be, even in bear markets, long opportunities, of course, like flipping the bias and going long at this, the pause day here. Now, if you did wait, that was difficult to execute, waiting for the pause day and then trying to get long the next day. You really had to be willing to trade the open at 8 p.m., like when the next candle opens, because the overnight could really start getting going. And I'll just give you an example of that. So the instinct was like when it got to this key reference area and went straight line down, we fulfilled the fact that this could just start balancing rather than have a thing down. It needs to balance longer. Then you got the double bottom. The runner should have went, didn't. Sorry, that was a mistake. Wrote that it should be a long, so that should have been exit. Should have flipped bias and went long, but like I said, had some things going down. Then this, you know, big zones can create big moves. That shouldn't have been a shocker. But it doesn't mean, man, I need to go in on the portfolio yet. That's why I'm zooming out on those higher time frames to keep that energy in check. And just looking at how Bitcoin behaves in the past. If you look at Bitcoin's entire history, you just look at that simple chart I showed you. It's like it does give you some calming energy. It's like, well, wow, like now you see some truth. And you could see, like, well, how did Matt time that? And that psychic that sells that pamphlet didn't. You know what I mean? It's not rocket science. Just look at what's going on, right? It's work though. You have to take the time to look at these patterns and then have the discipline to do it. So going straight line from one to the other, sign of exhaustion. Then you saw a buying tail. As this pulled back anywhere in here, you could have got short. If you were patient, I was like, oh, I'll be more patient. I don't feel like doing it. You stay up overnight a little bit and you get a top. I just couldn't do it. Like I said, my energy was down, smashed down. When this low came here, the old me was like, oh, maybe this would be break. No, you're not going long, even though it's going to probably go down more. It's not a great setup for a breakdown, so you can't really short that at the lows. Uh, not much, like I said, R, there's not much R on the day. And like I said, the call was most likely not going to be a down day. It was going to be a sideways day. I said that ahead of time. That was my daily call where it's like it could be two-sided because, this was a strong enough resistance zone and the way this behaved prior to that, right? That we're not going to break above it. But because of the strength of the bullish engulfing candle, the sideways energy is going to kick in. So you have to think like if there's a lot of things balanced, then you're going to get two-sided action on a daily time frame. Notice like I'm going down, like I'm talking about sideways action on this time frame, but I'm also talking about sideways action on this smaller time frame, even though within this larger time frame sideways actions, there's trend days within the balance, and there's balances within, like I said, if we zoomed out and saw the trend down, there's going to be trend down, balance. So every day is applying these holistic principles which don't change to an ever-changing market. But you will see through this lens how these patterns can repeat themselves. And then if you can get your spirituality and your everything else, your body alignment, you'll start executing really good and you'll start going on these winning streaks. When shit happens and life happens, what would usually happen is I would try to execute, make up for it with execution. Like, oh man, knew to take this double bottom, but made an execution mistake by not going along and not exiting a runner and then having the runner come up and stop me out when it came up here. When I was like, oh, just exit the runner. I mean, that was a big move I retraced. I was pissed because, violated a kind of a rule. Like I was basically holding the runner, hoping for a breakdown when I wasn't thinking clearly that the higher odds move was just going to be a balanced continuation based on principles that I teach, right? Most likely to balance. Going one line gets exhausted, needs to mature longer, much longer than how big of a trend we've had. And the way price behaved intraday. This isn't a trend. We had a trend down day yesterday. We know we don't get two downtrend days in a row consecutively. That's lower odds. And then it had a double bottom, super high odds. You can see just how like this system starts top down, hires up, then zeroes in on a fractal, like a Russian doll, zooming in, and then when you're about to execute, you're going for the kill. That's when you press the trigger. That's when the athletic part of the intellectual pursuit comes because you have to be like an intellectual athlete. Traders are right. Into like writing about what to do is very easy for me if I'm not I'm risking my own money. Boom, 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 boom. When I'm risking my own money and I do it publicly, that adds extra stress to it. That's another thing. But if you know the system works, if your goal is to get consistently profitable, then you will have no problem showing this live because it works. You can see how the principles work, and you can obviously apply these principles yourself. Everyone has a template for the system, and then as they spend more time and they can refine it. Now, just because you know what to do doesn't mean there's always going to be a low risk setup. Like two-sided day, I also knew to go long. I hate to say this ahead of time. I was like, if I was in an execution state, right, I was going to short this, go short here, and then get out at this double bottom and ride it up. Because I said candlestick pattern bullish. This isn't really going to go down. And it's just instinct. What time was this at? Late in the day, not trending down. But like I said, I'm about taking the higher quality setups only when I'm aligned. Like because I'm not in an optimal state of mind to execute for personal issues, dealing with certain things I've mentioned in the past. This is an example that you can use. Even though you know what to do, still don't execute. Even though I'm like, oh, I could have made money there. I knew to do that. I wrote about it. It doesn't matter. Your only goal is to maintain an optimal state of mind because I'm about the long-term game. If I'm not in an optimal state of mind, maybe I'm not going to be calling it as well as I have anyway. And then I'm just going to lose tons of money, which has happened. What the hell am I doing? How did I just bet on something somebody else said and didn't take responsibility for it or revenge trade or whatever it is? Because if you know the highest purpose is to maintain an optimal state of mind, then the goal is not to make money. It's to focus on that, and then the money really does come. That's the counter truth. It'll come a lot quicker. Your losses won't happen as much. And like I said, I hate this is for a lot of people that are just holding. I hate to say this, like this last couple months, in terms of like how much money I've made in terms of saving on the portfolio and having to reload this and then shorting. This was one of my most profitable months in crypto in a long time because I was able to see clearly and not just freak out when the time frame shifts. You have to be able to do this. It's like I said, knowing what to do is different than executing under real time because when you execute under real time and you're stressed out, you're not going to be able to think as clearly as you would when you're calm. And it doesn't mean that you're not intelligent or whatever. It means that you just didn't have a clear plan for your system under a very high stress situation. So that's what the systems are designed to do. Now, is there a way to possibly put a lot of these principles into a system that could execute for you and improve upon you? Possibly, but I think if I'm focused and I'm in spirit, I think I can outperform um, an algorithm day to day. They don't have the ability to get in and out as quick. They what they do have is they don't have the effect of the emotional ability. They can, I might have been outperforming an algorithm the last couple of days, but I didn't decide to trade because life, even though I saw it. But I still think that a human being, if they get into the right flow state, they will outperform these things. We'll see how it works. I don't know. I'm just curious about just thinking about. I was talking to a different people about recently. There's a guy that manages a pretty big quant firm. He used to manually trade like us, and now he does the quant thing. And it's like, I made you go, oh, the quants are taking over, la la la. He's like, well, I still know a lot of people that are, doing it our way because, you know, are the quants always able to switch it? They're still being programmed by humans. So how good are they able to extract this information and can they scan as well as a human in real time? I don't know. I don't think so. I mean, if you look at what I posted for the average hedge fund, most of these hedge funds are quant funds, and you saw what the average return was. And I mean, I've had even I've beaten that even on bags where I've performed on average below my usual performance. So lots of possibilities with this system. Our ability to get in and out, take losses quickly and well is our edge. That's why I post that risk management. But also, when we're following correct process and we're patient, we're going to win more than we lose. And when we win, we're going to win more than we lose. And that's how you get that combination of expectancy, positive expectancy. That's where we're at. You can see, right? The system is a hybrid of top-down multiple time frame for both investors and shorter-term traders. And we're going to continue to guide everybody through this challenging time in the markets. All right, guys. Thanks for coming out. Okay. Yeah, I guess I'll open the floor up real quick if anyone has any questions. There's only one guy in the chat. I don't know if he's still with us.
Oh,
Hello.
by the mention of maintaining an optimal state of mind is the goal, and the rest is going to flow. And
Yes.
it's kind of like trying to see again, getting lost in the forest because you only see the branches, but not having an overall vision. So yeah, that was a really really interesting aspect today.
100. And I'm actually going to start making more videos about the spirituality aspect of trading because if our goal is to actually in this material world with our trading make more money, then we have to actually focus on what is not that counterintuitively to actually do that, which is the whole system, right? So we're not going to focus on the money. We're going to focus on the spirituality aspect of it, but we're actually going to make more money doing it.
Well, when I joined the rooms, I think we were in a group together, and I mentioned that I was interested in improving my psychology because I was not feeling in the proper state of mind, and little by little, what I've been realizing is that I'm not in the state of mind. So all the time, I'm having hesitation about what to do. And today, you not only mentioned that, but you called it like the shadow part of
Mm-hmm.
of what is trading. And I was
Yeah.
touching that aspect this week with regards to Carl Jung and what is actually the structure of one's mind. So in the center, well, you have yourself, but the next bubble that surrounds that is the shadow uh, part that you are, and then you have the relationship with the world. So then, if we're not aware of that portion of that, it's kind of like it's all the time it's gonna throw us off. So I'm
Mhm.
really gonna appreciate that type of structure if you dedicate that as well. I mean, like the calls that you've been making in the recent months are being really sophisticated, and I appreciate them because it was kind of like going against the grain um, for many for the depth analysis that you have about the markets. But these psychology aspects are very important, and I appreciate them.
Yeah, yeah, thank you. Part of me making that shift to be able to do that is that I had to go into like observer effect. Part of me did not want to do that. I didn't want to go against the grain. I want this thing to go crazy and have a bull run like everybody else. It didn't feel good to do it, but part of me is like, another thing, a voice came in like, this is an opportunity, Matt, for you to take that part of you and push it aside and just purely follow the system with joy. And I was like, I can't help but see how bearish this is. I'm sorry. This is awful. That's really what I kind of wanted to say. Instead of just, I mentioned that in plain language a couple of times. I did get reptilian a few times where I was like, I'm exiting everything. Like this channel does give reptilian things like with an arrow, or I'm exiting the portfolio for people that just want that. But I never just give that. I'm laying out a system that everyone can see where you're like, oh, that's why he thought that. That makes total sense. Boom, bear, bam, 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 bam. I mean, even in all the bearish things, I was like, well, we do have this one bullish thing. It's just this one, possible, you know, zero line reject for the bulls. But I was like, but look how many things for the bears, and look how higher time frame for the bears. I'm like, this is so it. Once you see that, you can see how. Then another aspect of observing that came in where I was like, I feel really comfortable being the contrarian right now. It feels good to do that because I'm like, wow, I really followed correct process. It laid it out. I didn't care that I went against the grain. FOMO, whatever,
Well,
reloading.
I noticed the bear flag pattern like at the beginning of January, thanks to a chart that I watched, and actually my analysis goes very much on consulting what people would experience are observing in the charts, and that one resonated a lot for the uh, clear of the pattern. And then you start stacking the odds. At a certain point, I was hesitant about the Gaussian channel because it kind of has some like latency.
It does. I mean, that's
It's
why it's like you
actually
can't
like
purely
a
use
very
it.
good way, yeah, a very good way to just like see how it was switching.
Mhm. Yeah, it,
So
it it
so
really does. Like and then you could even zoom. You could look at the moving averages and then look at those golden crosses and death crosses. And it's like, wow, it held above
exactly
these two, the slow and the fast, the whole
that's
time. When you add up those two
my
things,
the way that I was like looking at it, it was like more from an impartial point of view. And actually, when you watch that type of thing, you gotta get biased. It's
yeah,
gonna be another anchor.
there's a time and a place for the neutral bias, but that wasn't the time for it. That was a time
No,
where you got to shift your bias. Now, notice like I made it neutral bearish. That was I didn't say bearish. The larger time frame bias was neutral bearish because longs can be taken at good trade location, but there's still going to be more shorts opportunities. Shorts can be taken. They're gonna, so that's a good category to add because that affects your daily calls quite a bit. It affects how you use the zones if you're looking for a double top or a double bottom, or if you're open, and whether you're going to take something directional. That's when you have to have a lot of pre-market factors for a trend in place and some other intraday things. But yeah, I mean, everything I've tried to put
it
together
needs
for
time
this
to
system.
catch up. Is not going to turn bullish without resetting the impulses and all the indicators need to get kind of like in a proper state. So it's kind of like it's going to be an interesting. I think it's going to be an interesting summer because it looks really. Uh, I think yeah, the way that you're comparing it with the last bearish period, it's kind of like a good reference point in the sense that to certain levels that Bitcoin already visited. So anyway,
And just one last thing too is we looked at the Gaussian, we looked at the CCI, we looked at Head and Shoulder, we looked at the last 10 years. I mean, here's another thing too. We just need one more thing. For the entirety of this bull run, we had the fast above the slow, and then the death cross is on this. And you could look at the 1 day, 2 day, 3 day, and see which one has the most right on patterns or false patterns. It's just about to form. And just going back, like, look, just about to form, huge move down, you know, um, huge, and then it has to have that sideways channel. Same thing, and then you got the golden cross, which that was the 2023 opportunity of a lifetime. And just to get perspective, right? Like we thought around here was the opportunity of a lifetime, right? The golden cross. It is sort of late because, like I said, but remember, the golden cross confirms the trend. If you bought here, it was just easier of a ride, right? But if you want to maximize your profits, you have to actually be more aware coming up around now. Because, like I said, the green star, I made it green because that's the death cross. Look what happens after the death cross if you're patient enough. You get actually way lower than the confirmation of the golden cross. But what you have to kind of sit through is maybe you didn't have do you buy here? Do you buy? No one knows how long. It's like, so you have to, you might, or do you, if you bought here, you're still golden compared to that, but you had to sit through some, a little bit more pain. Right. But I just don't, yeah.
I was going to ask you, you follow liquidity. I don't know if there is a way that you can actually see what the Gaussian channel is showing us, like a neat cut, and then it switched from green to it flips like vertically. There is no. It's like I know that it's kind of like looking it through the rear mirror, and that's why I was like, it's a little bit. But what I is if you have like perhaps one of your tools is to observe liquidity in the same on, and now it's risk off. So I mean, because sometimes I feel like, okay, it starts the bottom, but at a certain point there is like sort of like from now on it switches from pure bear to pure bull. I'm not sure if that's possible.
You mean like, does it go up and then down kind of a thing?
No, it's more like you see where you're on the sun, there is this round button, but at a certain point, it's like, okay, there is really the pivot in from which like the launching starts. You can see it visually, but I'm not sure if there is a way to evaluate like a flip in the market, like from when the market actually.
Here's something that I just saw that is. I just want to have a good way to look at it. You see how like we had a strong leg down before the death cross formed, but it was like about to form.
Mm-hmm.
This isn't good. I can't use that. I just want something to show like a projection. You see how the death cross in 2022 happened here, but we had a violent leg down here first.
Mm-hmm.
Okay, so let's just draw that. It's just for some reason. Here we go. Okay, so death cross hasn't even formed yet, but then that's really like right, the leg down and then the other leg down. That's kind of when it really starts. Now I know I'm okay with this being not the same clone because this was a way bigger move, so we should expect a bigger down move. This was a smaller up move, so whatever. But it's just the idea that pattern wise, didn't we just have a big move down prior to the death cross? So I'm not, this bottom building here doesn't give. I'm not confident here for that we're not going to have another leg down. We every time I can go back and look at this entire 3 day entirety of Bitcoin's history, haven't formed a death cross yet, but we had the double top. Gaussian channel broke, first leg down. This is not the Gaussian channel, but whatever. Same thing. Bull run, golden cross. Now death cross forming, but we had our first big leg down. Bottom building. Everyone same here. Oh my God, Bitcoin, this is it. This is the opportunity. Then you bought here at 27 instead of buying anywhere from 18 to 15.
117. Yeah.
And that's, if you, that's significant. That's not noticing that is a lot of leaving a lot on the table and a lot more pain and a lot more waiting and all kinds of things. So, I mean, the fact that this death cross doesn't form, and every time that it has, we get another move down. We can go back and look at it again. This should terrify everybody, really. But the move is going to be so violent that when it starts to consolidate, no one's going to want to go long again. In terms of reloading on a portfolio, it'll for the average person that's not like salivating like us, they are going to feel so much fucking pain that the crypto's done. It's a scam. I hate it. Fuck all you guys. And smart people at least like that don't have maybe they DCA'd now and they wait for they're DCAing through this. That's
Well, the other thing that I appreciate
about
here,
look at this 18, same thing, people. Look, Death Cross didn't quite form yet, but about to pinch like it is for the last from 22 and 26. Down move, pretty violent. Death Cross, and then goes sideways for quite a while, a little bit more. I mean, this one isn't as bad if you got somewhere here, but I'd rather get somewhere. This is like from 4,000 down to. Actually, I know these prices are small because it doesn't look good, but that's a lot of money to go from 4 to 2. So I take that back.
At the peak, at the negative peak of the CCI in that spot where you were at. Interesting to see how it's really deep. It goes really on in like 400 perhaps.
Yeah.
Minus 400.
And then everyone thinks that's going to be reversed, but it's just showing how strong the down move is. That's why I wasn't, same thing over here when we saw a hook from extremes, and then let's see, where was this hook from extremes on the? You see this hook from extremes is right on this. It's like, well, I'm not like thinking this is, oh my God, if you bought here, it's going to go straight up. No, we're not going to consolidate.
Well, as you mentioned, you got to stack the odds. It's only the first legs.
You could see how like all these parts become active in relation to each other. It's not like, oh, hook from extremes. Well, hook from extremes in the context of everything else. How does that play out? You know what I mean? So that's the secret sauce. All right.
Yeah.
Fibo.
Thanks for everything. And I'm looking forward to hear more about psychology. Pretty interesting. Thanks.
We'll be doing it. Have a good weekend. See you tomorrow. Bye-bye.